Ever wondered who can deduct TDS under Section 192? Well, it's not as complicated as it seems. Welcome to the world of taxes, a place where every penny matters. Now, let's dive into the basics of TDS under Section 192. This section is all about the tax deducted at source or TDS on salary income. But who can deduct this tax? The answer includes a variety of entities, companies, be it private or public, individuals, Hindu undivided families, trusts, partnership firms, and cooperative societies. These employers are tasked with the duty of deducting TDS every month and depositing it with the government within a specific time period. A key point to remember is that the status of the employer, be it a firm or a company, is irrelevant for the deduction of this tax. What's important is the existence of an employer-employee relationship. Remember, it's not about the status of the employer, but the relationship they share with the employee that matters. So, when exactly is TDS deducted under Section 192? Let's unravel this mystery. This particular kind of tax is taken out at the time of the actual payment of salary. It's not about when the salary accrues, but when it lands in your bank account. This could be when your salary is paid on time, in advance, or even in arrears. Now, what happens if your estimated salary falls below the basic exemption limit? Well, if that's the case, your tax payable will be zero and hence TDS will not be deducted. This rule is applicable even if you don't have a PAN. And what exactly are these basic exemption limits? For residents in India below 60 years, it's 2.5 lakhs. For senior citizens between 60 and 80 years, it's 3 lakhs. And for super senior citizens above 80 years, it's 5 lakhs. So in essence, it's not about when you earn, but when you get paid that decides the TDS deduction. Ever felt lost while trying to calculate TDS on your salary? Worry not, we've got a step-by-step guide for you. Let's start with step 1. This is where your employer estimates your salary for the relevant financial year. This isn't just your basic pay. It includes everything: dearness allowance, perquisites, allowances like HRA, LTA, meal coupons, EPF contributions, bonuses, commissions, gratuity, and even salary from a previous employer, if applicable. Moving on to step 2. Here, the employer calculates exemptions under Section 10 of the Income Tax Act. These exemptions can apply to various allowances such as HRA, travel expenses, uniform expenses, and children's education allowances. Additionally, the amount of professional tax paid, entertainment allowance, and a standard deduction of 50,000 rupees are reduced from the total income. Now, we reach step 3. This step involves subtracting the exemptions calculated in step 2 from the gross monthly income. The resulting figure is what is treated as the taxable salary income. It's important to remember that this is only the income that's liable to be taxed under the head of salary. So, we've got our taxable salary income, but we're not done yet. Let's move on to the next steps. We're on the home stretch of our TDS calculation. Let's wrap this up. In the 4th step of calculating taxable income of the employee, we must consider additional income the employee might have. If they have other income such as rental income from house property or bank deposits, these amounts should be added to the net taxable salary. Also, keep in mind that the interest paid on housing loans are deducted from the house property income. If there is no income from house property, a negative figure will be under the head Income from House Property. After adding or reducing these amounts, the resulting figure will be the employee's gross total income. Now on to the 5th and final step. Here, the employer reduces the declared investments for the year, which fall under Chapter 6A of the Income Tax Act. The declaration may include the amounts of investments such as Public Provident Fund, Employees Provident Fund, Equity-Linked Savings Scheme mutual funds, National Savings Certificate, and Sukanya Samriddhi account. It may also include expenditures such as home loan repayment, life insurance premiums, and so on. Similarly, the employer allows deduction under various other sections such as Section 80D, 80G, etc., and there you have it. A step-by-step breakdown of calculating TDS under Section 192. It's not as daunting as it seemed, right?